get to some earnings then. And let's focus on Havells. The stock was a little bit under pressure post its third quarter numbers. The consumer demand continues to be a little bit subdued. To understand more about this, we're joined by Mr. Anil Rai Gupta, who is the chairman and the managing director of Havells India. Hi, Mr. Gupta. Good morning, and thanks so much for joining in. Well, the revenue growth of close to only around 7% approximately. The weakness in the consumer demand continues. That was for the past quarter. Are there signs of some kind of a rebound in terms of demand? Give us your initial take.
Well, overall, if you see, Havells business has contributed 25% by B2B segment, which is actually growing faster. B2C segment, we have seen some muted growth, more so in the B2C class towns in the rural areas. But actually, if you see this quarter, we have seen positive trends as well, especially, the high base of last year fans, which is not really a consumption quarter for fans. We saw degrowth, but we saw a good double-digit growth in the other segments of electrical consumer durables. We saw very strong volume growth in the lighting business, though the value erosion kept the growth muted for the overall lighting business. And the switchgear B2B, the cables and wires business is also doing well. Overall, if you see the Lloyd volume growth over the last couple of years has been a very strong, over 35% growth. We are not really too concerned about the low growth in this quarter because this, again, as I said, is not a consumption quarter for the air conditioners. And we are quite hopeful in the coming season. The summer products will also start firing very well.
All right. So you said overall consumer sentiment was weak, but you saw some green shoots. So let's talk about, how you fared versus the market itself. If you could give us a sense across all your segments, what the market share of the company has been. And at the same time, for Lloyd's itself, you said this is not a seasonally strong quarter, but you'll be preparing for, the seasonally strong quarter, which will come by ahead of summer. So what will your strategy be out there? You have a new facility which is open too. Will you keep reinvesting? Lloyd's looks for market share over profitability for the foreseeable future, as you had pointed out earlier?
Yeah, on the first side, I think overall we are quite hopeful that the demand should continue to be strong. In the Lloyd segment, it's a very large durable category. The consumer durable category is almost as large as the electrical category. And there we have a long-term vision to be a very meaningful player in all the product categories, not just air conditioners, the other products also. So it's a longer-term play, and that's why we are targeting a very strong growth because, to be a meaningful player in this segment. As I said, we are experiencing more than 35% growth in the last couple of years. And that trend will continue. But there is a lot of focus towards cost initiatives within the organization as well. Whilst the investments will continue on the brand building and distribution, but there will be cost initiatives which will improve margins. Even if you see in the low third quarter, we have seen margin improvements in Lloyd business, and that will continue in the coming times as well.
All right, sir. But, the street would like to know, by when do you turn profitable? Come on, give us a broad guideline. Could it be sometime in FY25 that Lloyd will turn profitable? Point number one. And also, since Lloyd, you're talking about big growth plans out there, I think you have tied up with the distributor as well for exports, right? For Lloyd business itself. How do you see those numbers scaling out? Because that could be another opportunity.
Yeah, as I said, Lloyd is a longer term journey. We are not only seeing opportunities within India, but also globally, we are looking at Middle East market and especially US market also very positively for the Lloyd products. So I think, we are looking at expanding the revenue side of Lloyd. I would not say that, we are compromising profitability for volumes because the longer term play is also to premiumize the brand. So as we see more and more economies of scale and cost rationalizations, we'll see profitability in Lloyd.
And by when do you see that happening? At what revenue scale? Let's put it that way.
Well, the growth is going at more than 30%, and that hopefully should continue. We will see some quarters of profitability even in the next financial year. But the overall, I would say, our focus there is more on investments for the longer term.
Okay. Right. All right. What about, since we're focusing on profitability for the company on the whole, one positive is margins have slowly been improving. A couple of quarters back, we went down to 8.5% odd. And now we're on the verge of moving to around the double-digit mark yet again. So will margins continue to improve from here on? If yes, could we see a 50, 100 basis points improvement?
Well, not giving numbers to the numerics to this whole thing, but I think we will see constant improvement because, as we had seen, as I'm saying that there are cost initiatives in Lloyd, but also on the Havells side, we are seeing, improvement in business to business. Each business we are seeing improvement. And that's also because the raw materials have now started stabilizing. Also, the cost initiatives are kicking in. So I think even on the Havells side, we will see improvements in each category, which will definitely overall improve the margins for the company.
All right. I just wanted your thoughts on the fans business itself. You said that seasonally this is not a strong quarter for fans, but you had expected some pickup coming by in the second half, largely because the first half was marred by a lot of the regulatory changes in the fans business too. But what's happened is that in the last 1 year or so, there's been a disruptor in the market in the form of Attenberg and other new players too. Is the competitive intensity increasing in fans, and what is your strategy here?
I think what we've seen in the third quarter is also a high base for fans in the last year because there was channel stuffing because of the energy ratings change in the third quarter. Fourth quarter in the first quarter of this financial year, we saw slowdown in the demand because of the unseasonal rains in the summer season. So we are expecting a very strong summer. And for that, we have been investing. Even our brand building initiatives in the third quarter were based on the fact that we are expecting a very strong quarter and the first quarter for summer products, not only for fans, but for air conditioners. And, competition has always been there. I would not say it's a great technology disruption because all the companies have the technology. And we are very well placed in the market to see that our market shares grow in the premium segment. So we are expecting good growth in the fans and air conditioning business in the coming season.
You're well placed in fans. If you could give us a rough market share as per your estimate or guesstimate.
It's over 20% for fans overall.
And has it improved a little bit in the last couple of
It has been improving
weeks?
over the last 2 years. It has been improving.
Okay.
All the product categories, including lighting, fans, we have seen market share improvements over the last couple of years.
And cables, what would your market share be? I mean, just looking at all other parts of your business as well. You've been talking about building brands in Lloyd's, building market share out there as well. So cables, Lloyd's, all the other verticals of your business, where have you gained market share the most?
So we have two segments in cables: underground cables, which goes into the professional category, as well as domestic wires, which goes into the residential category. We have seen market share gains in the domestic wires, which is almost 60% of the business. But we are expanding capacity on the professional cables and the underground and industrial cables, which will show production in the coming financial year. There we'll start seeing market share gains in the cables business as well.
In the cables business, if you have to have a target on volumes, what could the growth be in FY25?
Well, I think we are looking at a 25% increase in capacity for underground cables for this business. And that should kick in, that should start kicking in, getting additional volumes for underground cables. I mean, not giving a growth number, but otherwise we are expecting that this strong demand will continue in the coming financial year as well.
You've been gunning for double-digit volume growth in the cables business for the last few quarters as well. You've been talking about that as your aspirational target. With additional capacity coming in, FY25 double-digit should be doable, right?
Should be doable, yes.
All right, take that point. Thanks a lot, Mr. Anil Rai Gupta, for joining in and giving us all the details of your businesses going forward. Wish you good luck for the summer season ahead, but more importantly, FY25 as well. Thank you for joining us. With that, we'll step into a short break. On the other side, we'll return with the market technicals. We're doing well on the Nifty so far, 21,400 thereabouts. Let's see whether it sustains here or not. What should your strategy be? Soni Patnaik of JM Financial Services will join in.